Good morning from Moscow. This is Ron Smith with BCS Global Markets. Global oil markets saw mixed signals this week. On one hand, in the U.S., we saw a surprisingly large draw on crude and refined product stocks, which was a bullish signal. On the other hand, OPEC Plus came together and agreed to return about 2 million barrels a day of production to global markets from August, which is at least a temporary bearish signal. Now let's take a look at that OPEC Plus decision a little more closely. In our opinion, this starts a very delicate process whereby OPEC Plus tries to take back market share that it had willingly given up back in March due to the COVID-19 crisis, and while keeping prices from getting either too high or too low. Obvious, too low is one thing. The OPEC Plus members all need higher prices for their own budgets, although note that they do have different price targets. While for Russia, $40 a barrel is low but acceptable, the Russian federal budget is set on a $42 per barrel assumption. $40 for most of the others is actually extremely low. Saudi Arabia, for example, needs at least $70 in order to balance its own budget. So too low, much lower than $40 a barrel, becomes a problem for much of these producers very quickly. On the other hand, they can't allow prices to get too high either. If you go back to the first of the year, a major concern for both Russia and Saudi Arabia was the amount of market share that they had effectively given up in previous years to U.S. shale producers, who were increasing production by 1 to 1.5 million barrels a day every year for several years running. Now, of course, with prices having gone very low, U.S. production is falling, and OPEC Plus wants to make sure that that process continues for a little while. So they must keep prices relatively low. And at $40 a barrel, we are starting to get into that region where U.S. shale producers might become active again. So much higher than here could be a problem. Therefore, the return of oil to the markets. Now, our house opinion is that oil actually has run a little too far, a little too fast, measured from the lows of April. We're overdue for a correction. We're thinking oil could go back down to $30 to $35 per barrel for a few weeks sometime in the next couple of months. Afterwards, though, with the resumption of global oil consumption after the COVID-19 crisis passes, and it will pass in the course of the next 6 to 12 months, the market will rebalance. Oil prices will be higher, probably around $50 a barrel. Thank you.